Hello everyone and welcome to Exness's Market Outlook. Joining us today to give us insights for the first time is Terence Hove. Thanks very much, Terence, and welcome.
Thank you very much for having me on the show.
What's the key idea, do you think, in terms of trading markets this week? Which is the instrument that you're focusing on?
At the moment, I'm quite excited about gold. It's seen quite a lot of whipsaw moves, and gold is at a crossroads at the moment. We've got strong support at a key level between, call it 1925 to about 1930. That's the key support level for gold at the moment.
And what do you think are some of the key narratives that are driving the possible movements by gold this week? Is the focus exclusively on the war, or do you think it's more the Fed, or a mix of both?
Yeah, what a time to be alive, because it's a bit of both. Actually, we saw that coming from Sunday evening going into Monday. There was quite a bit of a sell-off in gold as there was positive sentiment coming out of comments from the Russia-Ukraine situation, where both sides have been sounding optimistic for a positive outcome this week. However, as we saw in this headline, coming from that, this talk, they called it a technical pause last night. So hoping that it resumes today. And of course, we've got the US Fed coming out tomorrow evening, South African time.
So that's one key thing to be aware of this week, volatility possibly increasing around the Fed. Do you think there's any other factors traders might be monitoring through the economic calendar or any other releases of news or data this week?
Yes, so the first thing, as mentioned, we've got our economic calendar of what we're expecting to be the Fed announcement later on tomorrow evening, which is the key thing really coming for markets. Before that, there's US retail sales at about 2:30 South African time, and later on, so markets are anticipating a 50 basis point hike, even though Jerome Powell, the US Fed Jerome Powell, did indicate that he'll likely go for 0.25, but a lot of inflationary pressure has come in, also coupled, mostly driven from this situation of Russia and Ukraine. Let me just pull that chart up, which was in the previous week, where US inflation is at an all-time high, a 40-year high. That's 4 decades of high US inflation. And just looking at that print that came out of CPI, which was 7.9. So there's a pressure expected, pressure is on the Fed to actually contain this inflation. And as we know, high interest rates do not fare well for gold. So hence, these two, the rumors of these positive negotiations, plus, a Fed that's likely possibly going to hike higher than expected or more than expected, will prove not favorable for gold. Hence, that sell position tends to be a bit of a favorable trade at the moment if we look at the chart.
In summary then, we've got gold at a really key area around key support 1925 to 1930, and the primary narratives behind that are the big inflationary pressure as a result of the war in Ukraine, but also we've got the VIX, which has halted its move higher recently. And the things really that traders need to monitor this week are the Fed's meeting primarily, most importantly, and we've also got any further rumours or news from negotiations between Russia and Ukraine. Thanks very much, Terence, for joining us, and we hope to see you again.
Thank you very much, Mike, and looking forward to be on the next episode of the show. Thanks a lot.
And we wish all our viewers and listeners successful and responsible trading.